right now when we're buying, we're paying close attention to what the active listings are on that market, right? And so in that right there in that little pocket in that neighborhood, are there active listings? Are they sitting? And if they are, don't expect to go, because those are going to be your comps when you go to sell anyways. So you need to run your numbers, I'd say, at a 3 to 5% reduction as far as a sales price from there, just to ensure that not only you're doing the things that Omar is saying, we're going to bring the best quality product with all the stuff done, we're not cutting corners, and we can beat all of our competition by being priced more competitively.
As we talked about again this morning on the Daily Financial News, we are in a buyer's market. One of the things that you know about this channel is I have lots of friends and professionals in the business. And if they're in the business of flipping, wholesaling, they have to exit. As I said at the end of the Daily Financial News this morning, one of the things in a buyer's market that you don't want to be or sucks is a seller.
That's right.
We're going to talk to Jason Pritchard, who, again, I put on the Mount Rushmore of real estate investors. I've said that many times and mean it. Jason, what's going on?
Nothing much, man. It feels like it's been a while since we've been on the channel. I'm glad that we got a chance to connect and excited to get on today.
Absolutely. I love every opportunity to speak with you both here on the channel or just in person. But yeah, I've been very loud, and I'm getting louder, that we are in a buyer's market. We haven't been in a buyer's market for, arguably 6, 7, 8, 9 years, but we're in one now. I now think this is going to go through at least Q1 of 25 and could go all of 25 depending on interest rates. But you're in the business. You have a big marketing spend. You have a team. You're buying and selling. You're always transacting. And I'm guessing you're selling, so you're being impacted by this buyer's market. What does that mean to be impacted by a buyer's market?
Yeah, I mean, they always say in our business, you make your money when you buy, but you don't realize that revenue until you actually sell the house. So you got to actually get it through the end and sell it. And so we were chatting before we jumped on right now. We've got about a dozen flips that are listed on the market, just to give the listeners some context about the scope of our business. Thankfully, 9 of those flips are in escrow to sell right now, and they're in different stages. And here's what we've seen over the last, let's call it 30 to 60 days of trying to work through all that inventory on our books. We are not getting offers above asking, that's for sure. We're lucky if we get an offer at asking. And what we're typically seeing is products standing on the market for 30-ish, sometimes 45 days. And we are getting offers that are 3 to 5% within our asking price. And so the mandate down to my team is get out, talk to the buyer's agents, tell them, hey, we're open for business, right? Send us an offer if your buyer likes it, and let's put a deal together. And we're not being greedy right now. I think that is the big message that I want to get across to the listeners today is now is not the time to be greedy. You have to book those profits, especially with all the time of the year that we're going into and all the craziness that we just got out of with the election. I think now is the time to get this inventory off your books. You do not want to be holding it going into 2025. Yeah,
let's rewind the clock. I think it might have been 2 years ago. We were exiting Q4, entering Q1. And as I recall, that Q1 was rather painful, right?
Yes.
You booked a couple of 6-figure losses.
That is correct.
And that was really because rates shot up and really caught everybody by surprise. Out of that business, you pivoted. You were doing a lot more flips than wholesales or wholetails. Your business model changed because, the market was different. Mm-hmm. I'm curious, as you exit this year, enter next year, which the buyer's market may extend, are you thinking about changing the business model at all, or what are your thoughts?
Our business model is working well. So 12 flips is, it's not a little bit, but it's less than what we used to do, right? I mean, we would be carrying sometimes 20, 25 projects all at a given time, right? And we shifted, going back to that time, we shifted away from more of a predominantly fix and flip model to a model where we did some wholesaling, we did some wholetailing, and then we did some fix and flip. And right now this year, it's almost an even distribution, like split a third, and a third. And that's what's really been, I think, a saving grace for us. That business model works very well. It plays into our strengths, Zuber, because our strength is sourcing deals, marketing, negotiating, and then turning those deals. So we're a deal finding company. And so when we're good at that, it allows us to bring revenue in much shorter time periods than 4 to 6 months for every flip. And it doesn't create cash crunches in our business. So that inherently is good. And we're not changing that. I think that's going to be good. But with that flip model, the model that ties up, the cash for the longest periods of time, we're not going to be greedy right now. And I think that's the big thing, right? We talked about, offers coming in and letting agents know that we're open for business. And I know that we'll get into this too. We've had some significant repair requests. And I think buyers right now know that they have some leverage, and it makes sense. They're coming in, they're still paying 6.5% or sometimes 7% interest rate. So it's not like they're getting a deal on their mortgage, and they don't want to go into a property, even if it's a remodeled property, right? Some of these houses that we buy are 60, 70, 80 years old, right? And they don't want to deal with a sewer line going out in 5 years, right? They don't want to deal with a roof that's closer to end of life than it is beginning of life, or an AC, same situation where they're going to have, $5,000-$10,000 worth of repairs to come up, and they're asking for those things to be done. And so, you have to take a hard look at those repair requests when they come in, and you may have to bite the bullet if you're a flipper.
No, I think the buyer's market, this is what a buyer's market is. Again, I keep telling people, go figure out what the average days on market in your market is. I'm just going to say it's 15 for shits and giggles for the example. And in that case, start looking at everything that's 30 days or longer and get aggressive. Yeah. I think a lot of buyers, they think they get 2 or 3% off list price and they win. Dude, I'm telling people to get more aggressive than that. Go get some points for closing. Go do all your inspections and get credits for those, or actually get the stuff repaired.
Yep.
It's buyers markets are amazing. If you do the work, you grind, you get the best you can, because again, real estate's amazing. If you hold it for a decade, your chances of getting rich are really, really good.
Yeah.
And again, we don't have buyers markets don't last long. So let's talk about some of these repair requests that you've gotten. Again, sometimes they're unlucky. What were some of the bigger ones?
Here's an example of one that's unlucky, and then I'll give you another example of one where, in a different type of market, we probably would have just said no, but in this market, we're saying yes to it, right? So first example, we're dealing with this right now. We had a house that we're selling. This was one where we got an offer right out of the gate, full asking offer. We accepted it. They went in and did their repair request. They had, I'll just call it like a brand name retail plumbing company come in. We all know what we're talking about, right? Like the big operations came in, and they did a sewer line inspection where they run a camera down the main sewer line just to see, the quality and the condition of the sewer line. So the inspection came back. They found some debris in there, and the options that they gave the buyer were, hey, we can just flush it. We can just hydro flush it. It'll cost $1,000 and clean it. Or if you want to replace it, it's going to cost $12,000. And they used, not that it needed to be replaced. They said, hey, if you do want to replace it, it will be $12,000. It does not need to be replaced. And they use that as leverage. And it was just a little bit unlucky. We had our own sewer company go over there, our own plumbing company go over there and look at it. Said, this sewer line's fine. It's still there's no cracks. There's no any roots in the system. It's just got some debris. And we went back and forth. I tried to push back a little bit because obviously we want to negotiate and try to keep, as much, keep the best deal that we can for ourselves. But ultimately the buyer said, hey, if you don't replace this, we're canceling the deal. And I didn't want to, in the beginning of November, have a product that had gone pending, gone back on the market, which is always a bad look, right? Going into the slowest time of the year traditionally, right? Disclosing, and we have to disclose now, hey, here's all the inspections, the reports, all of that now has to be shared with what is the likelihood that I'm going to get an offer that is going to get me anywhere close to what I'm going to net, even after doing the repairs. It's very unlikely, guys, right?
Agreed.
And ask me how I know, because I've taken a hard line before in the past with situations like this, and it always comes back to bite you. And so you have to walk a very fine line with trying to negotiate the best deal for you and your business, but not go so hard, where I call it finding the bottom. We have to find the bottom, right? And we have to test where that bottom is at. And once we got to that bottom and I realized, hey, this seller is not, the buyer is not going to move anymore, we just said, okay, this is what we're going to do. And the compromise that we did was, we have a licensed plumber that we've used for years, that we know, like, and trust. that was, instead of able to do it for $12,000, he was able to do it for $7,000. So we saved a little bit of money there. That buyer's going to get a brand new full sewer line replacement for their house, and everybody's going to walk away. We're going to close the deal in a couple of weeks, and we'll be done.
There you go. I think that, again, that's a really wise move. I still remember, I don't know if I call him a buddy. I'll call him an acquaintance back in the 08 Bay Area, who didn't take a quick $50,000 loss on a property because his ego wouldn't let him. And that just led to a domino effect. Sometimes you just, take a little bit just to close the deal. Cause that's, and especially in a buyer's market, this is not 2022 where you're like, oh, screw it, I'll just put it back on the market. It's very different. All right. So what's the other example?
So here's an exercise that I encourage everybody that is buying, fixing, and selling houses. You always want to do, we call it a deal review or a postmortem of every single transaction that we close. What went well? What were the mistakes that we make? And how do we not redo those mistakes? How do we not do the same thing over and over again? And so recently we had a house where we did a roof inspection on the flip. And this is a best practice that I think everybody should do. So we do roof certs, we do full home inspections, and we do full pest inspections and clearance before we go on the market to just try to make it as clean as possible. You can't cut corners right now. And so we'll spend, let's call it the $300 to $500 for all of the inspections. So then that way, when it's listed, we can attach all those things. We can give them a clean bill of health with the pest inspection and clearance and all that stuff. And it just looks and feels like a better product that you're bringing to market. And we did all of those things, and we've been doing that for a while. They did their own inspection, which is totally fine. Their roofer went out and said the roof needed to be replaced. And I had a clean bill of health from ours. We had already paid for the certification. And I said, you know what? I'm not going to do the roof. And those buyers decided to cancel. We went back on the market, and I ended up making $20,000 less than I would have if I had just done the roof, right? And so now we had the same exact situation come up on a property that we're flipping over in Modesto. And what do we do this time? We decided to do the roof because we're trying to learn from our mistakes. And we said, hey, I'd rather eat $8,000 right now than, like we said before, go back on the market 2 weeks before Thanksgiving, where very unlikely that we're going to get an offer that's anything close. We had already been on the market for 40 days at that point, right? So think about that, right? Yeah. We had already been on the market for 40 days. We had already reduced $10,000. Then we had done a $5,000 reduction. That $5,000 reduction is what got us that offer there. And the buyers wanted a roof, and we ended up having to do a roof. So again, it's those types of scenarios where you have to not only not be greedy, but we're still going to make like a $40,000 profit margin on that. So it goes from like a $55,000 flip to $38,000 to $40,000, which is about our standard, right? But had we done a thinner deal at the beginning, right? Now we did 6 months worth of work to make 12 grand, and I'm better off working in corporate America. You know what I'm saying? And so you have to make sure you're buying these properties right to offset some of these things. And I know we're going to talk about the good side as an investor being in a buyer's market. We're able to buy at a little bit of a deeper discount, and we have talking points to go back and share with the sellers that we're working with the stuff that we are going to buy. And as long as you are changing your buying behavior, right, you should be able to offset some of this stuff that we're dealing with when we're selling some of our properties.
Yeah, we'll get to that in a minute. I just want to kind of reiterate something Omar, right? He flips down in the high desert.
Yeah.
He's talking about in his model, in the past, if there was a AC, right, that was maybe 5 years old and, looked bad, but was functional, he wouldn't replace it. Now he's instructing his team to replace it, right? Because he's trying to remove all of those little extra things because he wants to be the cleanest, prettiest, most dialed in property that to sell instead of waiting 40, 60, 80 days. What do you think of that strategy?
I think it's a great strategy. Omar, obviously very sharp guy, good friend of both of ours. He knows what he's doing, very similar business model out in the high desert to what we're doing here. And I think that's smart, and it shows experience and maturity. And I've been there and done some of these, taken some of these lumps, right? And so you've got to be paying close attention. Right now, when we're buying, we're paying close attention to what the active listings are on that market, right? And so in that, right there in that little pocket in that neighborhood, are there active listings? Are they sitting? And if they are, don't expect to go, because those are going to be your comps when you go to sell anyways. So you need to run your numbers, I'd say, at a 3 to 5% reduction as far as a sales price from there, just to ensure that not only you're doing the things that Omar is saying, we're going to bring the best quality product with all the stuff done, we're not cutting corners, and we can beat all of our competition by being priced more competitively, right? So if a buyer is going there looking, now they have options, and they're looking at our house, which is fully redone, new AC, new roof, all nice on the inside, right? And we're priced 3 to 5% cheaper than the house that isn't. Who do you think they're going to go with? It increases our likelihood for a fast sale.
Yeah, absolutely. Love all of that. So that's on the selling side, but now let's go to the buying side. Something again,
Sure.
Omar told me the other day is his I don't know what you would call it. I guess leads, his incoming leads. It's frankly off the charts, right?
Yep.
He's doing ads. He's doing TV. He's got a couple of billboards. He still does mailers, all this stuff. And he's like, Michael, I'm getting more phone calls and more lead activity than I've seen in years.
Same.
And so I wonder, when I hear that from guys who are elite, I wonder a couple of things. One, has your competition, like half your competition, disappeared? I'm wondering. Two, I'm wondering if it's a sign that, like I say, a buyer's market. So it's just frankly easier to find a motivated seller. And sometimes motivated sellers raise their hand. Look at me, look at me. So what do you think's going on?
I definitely think that, and I have the same experience that Omar is having right now. And these are metrics that my team and I track very, very closely on a daily basis. We look at these numbers on a weekly basis. They get rolled up into a report that I review. And the trend line from top of our sales funnel down, right, is the very top of it is net leads that come in, the total amount of leads that come in. And then after that is qualified leads. And since I would say probably September, the trend has gone up pretty consistently almost every single week. And so in theory, if the top of the funnel, we're jamming more leads in there, everything else should trickle down, right? So the number of conversations that we're having, the number of appointments we're going on, the number of offers that we're sending out, and the number of contracts that we're signing are all going up, which we're also experiencing. Now, why is that happening? I think it's a function of a couple different things. One, I do think that we are just in a market right now where a lot of people that have been fly by night that could come in when it was easy money and doing that, a lot of those people have either been weeded out or are in the process of just getting weeded out, right? You cannot find sustained, consistent success in this business, at least the way that I'm doing it, if you're not operating it like a business. It can no longer be kind of like a side hustle and a hobby, in my opinion. You know what I'm saying? And it's like, hey, we are right now, I mean, just to give context, dude, like our overhead monthly spends about $95,000 a month. Half of that is spent on advertising and marketing, right? So we're right around $40,000 to $45,000 a month in marketing. The rest is payroll and systems and all the other things. And we are really, really good at tracking everything, managing everything, and not leaving any meat on the bone. So I think it's like these old sales instincts and habits that we've had are really serving us well. We're treating it really like a true sales and marketing business on the front end. So I do think some of the competition is being weeded out. And I do think just the market and the sentiment is just shifting. And I think a lot of these sellers that were, the sellers that were motivated to sell their property, that were just kind of holding out or waiting, they've realized that other shoe hasn't dropped. And now it's just like, all right, maybe we're just going to take what we can get. And so the people we've been talking to literally for a year, dude, like we have this last month, half the deals that we've closed were sellers that have been in our system for 6, 9, 12, 18 months. We've just been talking them and touching them and touching them and touching them. And those are the things that a lot of newer investors will not do. They'll talk to them once, maybe twice, and then they're on to the next because they can only close people that are ready to sign right now, right? And so I think guys like Omar, like me, like we have a true understanding of what it takes to follow up. And because we've got them in our funnel, we're just going to keep staying on top of them until the timing is right from them. And now they're just realizing that, it's not going to be a replay of 2021 or 22 again, where the market's just going to continue to go up.
I want the retail investors to realize that what Jason just talked about, and undoubtedly Omar does as well, is the money's in the follow-up.
Oh my
Like,
God.
even if you're like me and all you do is buy out of the MLS, I don't want the seller to take my first offer, right? I want to set it. I want them to tell me no. I follow up in 10 days. I try again. All you know about a listing on the market is they want to sell, right? They can pull it off the market, sure, which they can do. But at some point, they're going to like, this is the only guy here.
Guys,
Right?
and buying off MLS, the follow-up should actually be inherently a little bit easier because you're touching the agent, and who is more motivated to get the house sold than the freaking agent. So it's like, it's almost like a 2-on-1. And I don't mean that in a bad way, but it's like you have this person that's an advocate for you, right? And sometimes you shoot your shot and you come in, and I agree, dude. Like, I don't think we should be coming at 3 to 5% off. Go 10% off. Come in with a deeper discount. You always talk about disrespectful offers, right?
Yes.
And you throw that number out. Let's say they're listed at 300 and you know it doesn't work. Don't be afraid to throw something out in the mid 200s, 250, 260, and see what happens. And we call that, with direct to seller marketing, creating a price anchor, right? We intentionally will come out with a low number at the beginning, right? That's within reason. Obviously, we're not going to be like completely out of hand with our offers, but our price anchor at the beginning is designed to like anchor the seller and test where their price sensitivity is at. And you should anchor at a number where you have a little bit of room to come up, because it's always a negotiation. Sellers and buyers always want to feel like there can be a little back and forth, so there's a win-win with everybody. So you do need to go low at the beginning and then be able to work your way up a little bit. And if you just set a reminder in your calendar, you don't have to have a fancy CRM. You don't have to have like some crazy systems like Jason and Omar have, or Zuber has, or whatever. All you need to do is have a simple spreadsheet, a calendar, and a reminder system where it says, hey, I made an offer on 123 Main Street for 250 grand on the 1st. On the 10th, I'm going to circle back with that agent and just see how things are going. And then I'm going to keep an eye on that listing to see what happens. And 30 days from the 1st, I'm going to check back in again. And guess what? Nobody else is following up. If that house has been sitting for 30, 45, 60 days, all the other people that threw offers in on they're on to the next. And who's there? Zuber's there, touching that agent. Hey, what's going on? I'm still here. I still want to buy this house. What's up with your seller? And I guarantee you will do more deals if you do it that way.
You know,
the
magic of 90 days. As it, like, if I do one of my disrespectful, and let's be clear, when I give a disrespectful offer, I tell the agent the story. Right?
Yeah.
This property doesn't cash flow at 300, blah, 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 blah. It only cash flows at 237, whatever it is, right? I want them to know how I got to that number. And then I just do the follow-up. But the magic at 90 days, should a property get that far, is your point about 2-on-1. That agent is probably 90 days away from losing that listing.
Losing the listing. Yeah.
Hello. They're paid last. So again, folks, the money is in the follow-up.
I love and you said it, but I want to reiterate. I love the thought of laying out and explaining. You need to be able to explain why your offer is what it is, right? And I do think that sets you apart from anybody else that's just firing off these offers but never touching back or never doing anything. And just, you can just, we get those all the time on ours. And I'm like, okay, you're offering me 100 grand on a house that I have listed. Where does this come up? Where are you coming up with these numbers? And if you can tell a story and just send in an email or in a text, a couple bullet points about, hey, right, here's how I'm running the numbers, and this is what I'm seeing on my end. Feel free to pass this along to your seller. And you do the job of being able to give context for the agent, so the agent doesn't go back and explain, right? The agent that the house probably needs to be listed closer to the offer that you're making. You giving them that ammunition as an investor. A lot of agents are not investors. A lot of agents don't underwrite deals like that. A lot of agents are, rightly so, working for their client, and they're trying to get the most for their client. And sometimes agents, because there's such a shortage of activity and listings right now, they're going to take listings at a price where they know it's not going to sell, but they're going to do it anyways. And you need to help them explain why the price needs to be down here, right? And through that follow-up and that thorough explanation, all it's going to do is increase the likelihood that you're going to get your offers accepted in the long run.
I love all of that. Again, buyers markets are pretty rare. They don't last forever, folks. Use these to your advantage. Be good, follow up, do the work, all the stuff we talk about. But I want to go back to your business, right? You've seen top of funnel qualification, everything kind of go up and to the right.
Yep.
I'm going to guess this is true, but we'll ask the question anyway. Have you changed the numbers that you're willing to buy stuff at? Meaning, have you lowered them? Are you asking for more meat on the bone, to use an earlier phrase? So you have, you like, maybe you lowered your ARV. Maybe this house you looked at, if it was a year ago, it was 300, but today you're telling your team it's 290 because you want to have more like, are you buying differently?
Yes, we have to anticipate some of the trends so we can see the trend, but you have to extrapolate that out 6 months if you're going to flip a house, guys. And so if you can kind of see it ticking down 1% or 2%, if you push that out 6 months or sometimes longer, if you're buying tenant occupied or you need permits and plans done, all of this is going to be dependent. The length of your project is going to be dependent on how complex of a project you're taking on and all the other variables, right? So if you're buying something with a tenant in California and your plan is to flip it, you're probably not exiting that house for 9 to 12 months down the road. And Absolutely. So you're better off now. You have the leverage now to tell the story and paint that picture to the seller like, hey, Mr. and Mrs. Seller, you've owned this property in California. You know that these laws for tenant landlords are skewed towards the tenant. Now, I'm going to try to work my best with the tenant, but worst case scenario, if we just can't come to an agreement, I'm not even going to see the inside of this house for 6 months. So if you want me to take that problem off your plate, I will 100% do it, but it's going to reflect in my price. And here's why: because I've got all these other holding costs. I've got the potential legal fees associated with the eviction. I've got the potential damage that I got to deal when you evict a tenant and they go out and they're pissed off, right? So that your ability to really paint a picture to those sellers and explain why your price is where it is, and not just, it works both when you're buying, but also when you're trying to do it with motivated sellers, with agents or direct to seller. You have to be able to do that. And I really, truly think that's one of the things that, I'll just speak for our team, that's what sets us apart. We really understand all the nuances that are involved with buying some of these distressed properties and knowing all the problems. And we've been there and done that. And we've touched the hot stove and we burned our hand, and we can share that story with sellers. And if you can get the sellers to know, like, and trust you enough to really hear your side of the story, and we always tell sellers, it's got to be a win-win. You've got to be happy with the price, considering all the circumstances surrounding the house, and the numbers have to make sense for us because this is a business. And if we can get there, this will be the easiest house that you've ever sold. And if we can't get there, there's no hard feelings. We can steer you in the direction of plan B or C if selling to an investor doesn't end up being the right option for you. And that takes all the friction out of the sales process, and it makes it more, we always call it a consultative approach. We just want to lay the options out to the seller, you pick, and then we'll get you to whatever that final destination is going to be.
I love that. I love that. I'm curious, if I were to paint a picture of 2025, and again, I'm using transactions as the bar here.
Yeah.
Let's say nationally, we do 3.9 million transactions, existing home sales nationally. Let's say that's down 10%.
Down. I'd say down. Yeah.
Yeah. Let's say it's 3.6. Now, again, I don't know Fresno's details, but let's assume Fresno's down 10% also.
Yep.
Just to keep the trend going. Does that make you nervous? Does that change anything? Does that maybe excite you? Because again, I think the beauty about making a plan and being elite is you're excited no matter what. Because you've probably already made that plan. You realize it's going to be hard, but it will be hard for everyone.
I get more excited when it gets harder, dude. And I think we've talked about this. When things get harder, I know more and more people are going to opt out, which means the cream will always rise to the top, and there's going to be more opportunities for the people that just can lean in and push through these obstacles, man. And so, yes, is it going to be a change? But we've talked about that in relation to our experience coming from corporate America. I spent 15 years having the goalposts changed every year on my compensation plan. So I'm just conditioned to knowing that the way that we made money maybe in 2024, we're going to have to adapt and evolve, and we're going to have to, the core business is ultimately going to be the same, but there's going to be nuances within how we transact and negotiate and do all of those things. And we're always up for that challenge, man. And there's part of me that likes it and gets excited. There's part of me that's also, okay, this is going to be new. And, I just like a normal market where things are easy to predict, and that would be great. But right now, that's not it. And we don't get to pick and choose, dude. We have to become a higher, better version of ourselves and evolve. And I do think that inherently, one of the reasons why I'm going on 10 years in the business, in February will be 10 years, right? And one of the reasons why we've had 10 years worth of consistent success and growth with my company, even through a changing market, is we have always been able to buy deeper than most people out in our market. We never had to force deals, right? And we always were able to rely on what we just got done talking about: our ability to connect with the seller, our ability to build rapport with the seller, and our ability to say, hey, right, some of these investors are going to come, they're going to tie you up at a crazy price, right? And their goal is going to be to drag you all the way to the end and then pull the rug on you and knock you out like a day before you close escrow. What we will pride ourselves on is this number. It may not be the best price that you see, but I can tell you that we're going to perform on this price. And our value proposition, I feel, has always been that, right? Not trying to promise them some pie in the sky number, being able to professionally and clearly explain in layperson's terms why this is our offer. It's not because we're trying to undercut you. It's this is what's going on. And that strength is a muscle that we've been building for so long. And it's really going to give us an advantage going into a market where we're going to have to buy deeper. And that's it, to save us from some of this stuff that's there, right? And so skill development for a lot of the people that are newer, I think, is a thing that never ends, guys, right? You never stop learning and how to get better, and never stop adding tools to your tool belt, right? We have a core focus. So I'm not saying bounce around to a couple different things, but us as investors, we have to constantly evolve and progress into better versions of ourselves. And a lot of that has to do with your skills and your communication skills and your ability to connect with people. Not just, if you're not doing direct to seller, it's direct to agent. It's the same thing. You have to be able to explain in a reasonable and a professional way why your number is where it's at, right? And so that's what we're good at. And I think that's the thing that is going to carry us through any changes that we see in 2025.
Love that. Love that. I know you just held another real estate meetup. Deal Champs, Aaron and Cletus were the featured speakers. Mm-hmm. I actually want to talk about the audience. One of the reasons I still love going to meetups is it gives me a pulse on what the audience is thinking. So I'm curious, when you're interacting, before and after and going through the live Q&A, what is the audience thinking? Are they thinking it's scary? Are they thinking it's too hard? What is the person just?
I think there's a lot of questions about the market, and rightfully so. I mean, it's not, the main narrative that people are seeing are rates are high, transactions are down, things are shifting. It's kind of a wonky market where, I think, rewind maybe, 45, 60 days ago when the Feds cut the rate 50, I think everybody was like, all right, everything, now we're back, dude. And then it keeps changing and moving. And so I think that creates some fear and some uncertainty. And I would say that's a common theme amongst the people that are there. But here's the thing, guys, it's when people get scared and people are frozen, that's the time to act, because the masses now are kind of like, oh, well, maybe now's not the right time. So let me and what is Jason doing? Buying 10 houses a month, every month, like he does every single month for the last 2 years. You know what I mean? And that's only going to get more and more and more. So again, instead of focusing on things that you cannot control, like the Fed and interest rates and the overall market, right? You can get really good at focusing and becoming an expert right in your market. You can do really good on the things that you say, doing the work, understanding your buy box, learning how to underwrite deals, making connections with other agents, other investors, sellers that are looking to sell. That's the stuff that you guys can control. And that will give you confidence even in face of some of the uncertainty that we're seeing in this market, guys. We talk to you guys all the time about doing the work and the importance of doing the work, because when you are lacking the result of actually closing deals, that work is what builds the self-confidence, right? You underwrite the 100th deal that you underwrite, you're going to be better than on deal one. The 100th agent that you talk to, you're going to be much sharper on that call than you are on deal one. And everybody ties like their expectation to the outcome, which is typically doing the deal. And they forget there's all these steps between A to Z. From when you start to doing a deal, there's all these things that you have to progress and get good at. And you got to focus on doing that stuff right now. And the more that you do that, the less the noise out there that will dissipate a little bit, and you'll start focusing in on the signal. And that's what we do. We don't get caught up in that stuff. We just focus on what we're supposed to be doing every day. And that's why I feel like a big reason why we've had the success that we've had over the last.
No doubt. No doubt. I guess one of the other things I want to talk about the Fresno market, or maybe Central Valley, because you cover so much of it, is, do we still have really a bifurcated market, meaning there's below the median in luxury? Is luxury still stacking up, just not moving?
Honestly, we're not looking at anything that I would consider luxury. It's interesting. We've done better, Zuber, and I would say kind of like there's this mid price point here that is above the median, let's call, which is like just under 400,000, right? Depending on whether you're in Fresno and Clovis. And probably like 600 grand or maybe 650.
Okay.
Those houses, we're not going out of our way to do 20 of those houses, but we've actually done better on, the 10 or 15 flips in that price point than we've done on average with the smaller price point. Now, we will always do the smaller ones. The smaller ones mitigate our risk. And when I say smaller, at or below the median price, right? So we're selling at or below the median price. But that second tier that we see, that's before luxury, right? And here's why I'm thinking, right? A lot of times in that, let's call it, we have a house right now that I think we have listed for 520. So just kind of above in that second tier right now. All of the sellers that are selling those houses, those are usually houses that are, let's say, 30 years old or less, right?
Yep.
A lot of those houses are in pretty good condition. They're in good neighborhoods. They're in good schools. All of those things. They don't have kind of like the deferred maintenance issues that a 70, 80, 100-year-old home have. But all those sellers, right, are usually owner occupants that are trading up and haven't done anything to the house, right? So they're still the square tile. They're still the yellow oak cabinets, right? You can move into them and it's financeable. But what happens when Jason takes his house that's new flooring, granite countertops, new paint, new light fixtures, the stuff that looks and feels newer, those houses are going like this. I mean, we just had a cash offer on that house within 3 weeks, like right out of the gate. Like it was crazy. And so I think, again, we are not intentionally picking and choosing, and maybe we need to turn some more marketing on over there now that we're talking about it. But those houses this year, we've done very well on, right? And so that's something that's true to Fresno. So
yeah, I think there's something there. And again, just so people know where I put luxury. Luxury to me is always 2x the median. If your median's 400, luxury starts.
So let's call it 700 and up, 750, 800, something like that out here. And
totally
up is probably
different. Totally different market. The buyer pool goes down to this. Right. All of that. But if you could be in that kind of, hey, this was the neighborhood 20 years ago. For the doctors and attorneys and all of that. It's still very level. It's financeable, to your point, but it's original. Right. If you can go into something like that, and with, it doesn't take a lot, right?
And that's the other cool thing. Those rehabs are so much easier to pencil because we're literally doing flooring, paint, countertops, light fixtures, finishes, plugs and switches, call it a day, 20 to 25 grand, depending on the size of the house. And we're done and we're out of there. And it really looks and feels completely different than every other house that's on the market.
Is that 3 weeks for your team? Let's say you close, you get keys. 3 weeks.
Yep. If we close, it's vacant. We've got all of our bids in while we're in escrow, and they hit the ground running like the day that we close or the day after we close. We're on the market probably 30 days or less. We'll use that last week for, landscape, cleanup, staging, pictures, all that stuff. And those are houses that are working very well in our market right now. And it's because you don't have surprises with your rehab. You still have a lot of demand because you're typically buying those in like B+, A- neighborhoods where there is demand and there is not a lot of inventory. And the inventory that is there doesn't look as good as what you're bringing to the market, right? And so
you're the oddball, right? You're the oddball.
You are,
That's unique.
So,
So let me ask this: who's the seller? Are we talking divorce, probate, job? Who's
everything?
Selling?
That's the interesting thing, guys. Like, we are getting ready to close in a couple weeks in a house that is perfect example to this. Like mid 2000 builds, And backstory on this seller is they had some type of medical issue, and now they're wanting to relocate and get closer to their family in South Carolina. And it's just like, hey, you know what? We've got a ton of medical bills. We've got some equity because they bought in 2010 when it was new. So they're going to walk away with a ton of cash, and we don't need to buy it at 50 cents on the dollar, guys, right? We can buy it at a let's call it, 65, 70, 75 cents on the dollar. And there's still a really good spread in there for us. They're really happy with the price because what are they seeing, right? They don't want to go on the market. Funny story on this house, it's an actual agent that's selling to us. The wife is an agent. And so she's even like, I don't want to list this thing on the market. I don't want to do anything. I just need to get it done because of the urgency with the medical stuff, and they're going there. And here's the thing that everybody needs to remember. All of the circumstances, and we call them problems, that we need to get really good as investors that we need to solve. They're inheriting an unwanted house. They've got a problem tenant. They're a landlord that's acquired a bunch of properties that have deferred maintenance and they're aging up and they're getting older. The house needs a ton of work, or there's like some financial distress. There's behind on their taxes, behind on their mortgage, medical bills, divorce. That stuff happens in entry-level houses. It happens in this mid-tier that we're talking about. It happens in luxury. And your job is to get good at understanding, how do I solve all these problems? Yep. And I wouldn't recommend trying to become an expert in, there's 8 to 10 things that we see every single time. Get good at 1 or 2 at the beginning and become an expert at that. We're 10 years in the business. I didn't know in year 1 how to do probate. I had to do 100 probate deals. And now I know as much. I don't know as much as a probate attorney, but I know enough to know exactly how to navigate all those situations. Yeah. We've done tons of foreclosure and pre-foreclosure, so we know how to navigate all those situations. We've done tons of evictions, so we know how to navigate all those situations. And you just get more confident at. So our job as investors is to help sellers solve their problems. They've got a problem surrounding the house. If you can get good at explaining how your offer allows them to resolve this issue and get to, we call it their picture perfect scenario. There's something over here that by the sale of their house is going to unlock their ability to get over here, right? And you have to show the seller that you're the bridge to get them from this point to that point. And you're going to hold their hand the entire way. You're going to make it as easy as you possibly can. And when you can get good at that, not just solving the problem, but explaining it to the seller and really then performing on those promises that you're making them, you will make as much money as you want in this business.
I love this. Jason, we're going to see you and your lovely wife, Jen, at the Vegas event, right? February.
We are going to be there. Yep, absolutely. 15th and 16th of Feb, right?
Yeah, absolutely. Absolutely.
She's been showing me all the graphics and all the stuff that she's been helping you with, dude. Yeah, she's good. She's like, what do you think about this? What do you think about that? Yeah, she's good. She's really good at that stuff.
Steal some of her talents. But one of the things that I want to do is make sure folks, you've obviously loved this conversation. I don't know how you couldn't. You obviously now understand why he's on my personal Mount Rushmore of real estate investors. I don't know if you've done this, but you need to go to jasonpritchard.com because he gives away so much stuff for free. It is mind-boggling. What's some stuff that's out there?
I'm not even kidding, guys, and this isn't even exaggeration. If you go to our page and right on the main landing page, there's a free toolkit that we give away. And it's got about, I think, a dozen different tools and resources that we use in our business every day. And these are not watered down resources. This is not the light version. And then you got to pay for the full version. This is every single tool and resource, from how do we find sellers, the systems that we use to pull all this information for our marketing, the vendors we use for our marketing, the scripts that we use to talk to all the sellers, the deal analyzer that my team uses every day to analyze the 5 to 7 properties that come through our system every single day, the contracts that we use, the assignment agreement, the note and the deed of trust with our private lender. I'm literally saying, like, everything that we use in our business, it's there for free. So I would highly encourage you guys to go there, download that free toolkit. And if you have any questions about anything, the best way to get in contact with me is on social media. I answer all my DMs. I get tons of outreach and support. I love helping the one rental at a time community. I get lots of people that watch these videos and reach out. And if you have questions about how to implement and execute on any of that free stuff, shoot me a message. And if I can be a resource to you, I'm happy to do that.
Would you say IG is your preferred platform for messaging?
IG, Jason Pritchard on Instagram, Facebook too. I'm active on both. So you can just put my name in, Jason Pritchard, on either platform if you're on one or prefer one or the other. I get all the DMs on there directly to me. And I'm happy to help any way that I can.
Man, you're amazing. Thank you for being here. Keep going. Have a wonderful day.
Good deal. Thanks, Julian.